Welcome to July's Fixed Income Outlook, where we're going to talk about what is more important now, risk management or return management. If we're talking to investors who have participated in fixed income over the last 2 to 3 years, they aren't very happy with what fixed income has done for them. They are complaining that returns have been too little compared to what they've earned in equity. They are complaining about how this new change in tax regulations in this time frame is affecting their post-tax returns. And they are talking about long-term wealth creation and how fixed income is just not suitable for that. These are all very valid points for an investor to make today, but we need to acknowledge that there is a role, a very important role in fact, that fixed income plays in our portfolios. They help us manage risk effectively. Risk management is something that all of us have forgotten about in the last few years because we've only been looking at how to manage our returns very well in this market. We've had a very good run for equities and that run is still going strong. So we don't know when that change is going to happen. We need to be prepared for whatever comes ahead. But risk management is something that we have all forgotten about in the last few years. This is because we have channeled our full attention into how to manage returns. And equities have had a stellar run and it still looks like that rally is going pretty strong. In this time, what has happened is that investors have forgotten how equity behaves as an asset class. It is very normal for equity to behave in certain ways, but investors don't seem to remember that this is normal. Let me give you 3 examples of how equity behaves and how investors are not mentally tuned to that behavior. Firstly, equity returns can be lumpy and cyclical. This means you can have periods of very good returns for equity, very average returns for equity, and very low or even negative returns for equity. This is normal. The second important feature is that equity returns can actually be negative at times. Most investors have only seen an upward positive trajectory in their equity investments and they are not prepared for a negative return. Why is this important? We are hearing investors complain today saying that I am only earning 7% or 8% in my fixed income investments. If the investor has this mentality, can they handle a negative 5% or a negative 10% return? Probably not. The third feature of equity, which is very normal, is that a 12% compounded return over 3 to 5 years is a great return. We seem to think that 12 to 15% is just mediocre, 20% is okay, and above that 25 to 30% is what is a good return. When you are making these larger returns in a shorter time span, we need to go back to point number 1 and understand that returns will be lumpy. So if we made 3 years of returns or 5 years of return in 1 year, there has to be a year where we're not making that return. So mentally as well as financially, investors are just not prepared for a bad phase in equity markets. How can you think or prepare for this? Most investors are not even thinking that their equity returns next year or this year can be lower than what they have earned. Very few are thinking about how they can protect themselves. You can protect yourself with some level of profit booking, some level of asset allocation, and a constant review of what is going on and where you want to participate in the next cycle. If you do this consistently, you will prepare yourself for the next phase. It's up to you now to decide what is more important for you. Is it risk management, which means moving out of equities in some manner, probably into fixed income, which is offering very attractive returns for the kind of risk you're taking, or is it about return management where you're going to try to squeeze that last extra drop that is available and with that also take in whatever risk is there? Tell us what you think your priority is in how you're handling your investments in the comments below. If you'd like to know more about fixed income investing and opportunities as well as the landscape, please join our WhatsApp community.